A mastery of market structure is a key to any trading plan. So what is market structure? Market structure, also known as price structure, is the overall framework and geography of a chart. And the core components of market structure are: 1, trend. An uptrend is a series of higher highs and higher lows. It means the market structure is bullish. And a downtrend with a series of lower highs and lower lows, the market structure is bearish. We also have a range or a ranging market, which is a series of relatively equal highs, which is known as resistance, and lows, which is known as support, with no clear direction. 2, we have key levels. Support, which is a price level where buying interest is consistently strong enough to overcome selling pressure, causing the price to bounce. And resistance, a price level where selling interest is consistently strong enough to overcome buying pressure, causing the price to drop. Then we have breakouts or breakdowns, where price decisively moves through a key level of support and resistance, often indicating a shift in market structure and a potential new trend. So let's go over to the charts and I'll show you this in action. Okay, here we have the S&P 500 5-minute chart, and we have a lot of the components of market structure here, and I have marked them out here. So let's go start from left to right, and we'll go over everything. So as you can see, we have a clear downtrend here over on the left side. We have a series of lower highs. So this high is lower than this high, and this high is lower than the previous high, which is a clear indication of a downtrend, as well as lower lows. So this low is lower than this low is lower than this low, and so on and so on, until we get here, and then we start creating a sideways consolidation. We have a tight range, so we have support and resistance. We have resistance at the top, support at the bottom here, and then finally we have the downward breakout, and then the retest here of the consolidation area, and then a series of lower highs and lower lows, creating a downtrend. Then we come down here and we have another form of market structure here, which I'd like to talk about. It's sort of the W. It's kind of the W formation here. And then once it breaks out, this is like a 2 W's here in a row. But you have the one low and then another low, and then you have the neckline here. And once it breaks above that, that's called a change of structure. And in this case, it's creating a uptrend. So we have the break of structure here at the neckline. Now we have a higher high and a higher low. This low is higher than this low, creating a higher low, creating a uptrend. As we can see, we have a series of them. Higher high, higher low, higher high. And then this is also a higher low. This low is higher than this low here. So it's considered still in an uptrend, although here we have a lower high. This high is lower than this high, so it could indicate a reversal. Now we also have an order block here, which created the reversal. An order block is a green candle before a large impulse move down. So we have this green candle here, right here. Can't put my mouse on it. And then we have a downtrend, which creates the order block. And then we have a retest of the order block right here, which is a great entry position. And then a continuation. Of course, it stops right here. This is the end of the week and end of the day. But that is market structure, and it is extremely important to be able to look at the chart and identify what state the market is in. In other words, what is price action doing at this particular time? So if you're looking at this section of the chart and none of this to the right has happened yet, you would see that the market is in a sideways consolidation, and it's going to break out either to the upside or to the downside. And in this case, it broke to the downside, retested the consolidation area, and then continued on. So with enough practice, you'll be able to look at that in just a few seconds and know exactly what the market is doing. Not to say that you'll know what the market's going to do, but you will know what the market is doing at that particular time. Also, one last thing I'd like to point out is the M structure here at the top. And it's just forming right now as we speak. Market is closed, of course, but we have the M, and then we have the neckline right here. We move this up here. This is the neckline. Once this breaks, it is a shift in market structure, and it usually will follow down. You can draw things like the eyes here and some eyebrows, and you can see that this market is not happy if it breaks the neckline, that is. So as you can see, it tested the neckline here, and it's playing around up here. If it comes down through here, then it will be a clear shift in market direction. A few other things I want to point out real quick is support and resistance. I know this chart is getting very messy, but let me draw a few more things on it. So here we have some support up at the top, the very top here. And the reason this is important is because there are a lot of stop orders up here, and the market makers will shoot for those areas to take out those stop orders, as well as down at the bottom here, right there. Those are our external liquidity areas, and then we have, of course, interior or internal liquidity areas where a lot of stop orders are. And of course, it came up and took out this area with all this price action right in here. Now we're creating a few double highs here, almost equal highs right here, and equal highs and equal lows like to be taken out because there are a lot of liquidity orders there, a lot of stop orders there, creating liquidity. So I think we'll stop right here for market structure, and then we'll get a little bit more into some candle structure in the next video.